Hi, welcome back to Joe Blogs. In this episode, I want to provide you with an update as to what's happening with the shares that I bought on the 5th of March. Now, when I posted that video, it got a lot of negative feedback because almost immediately after I said that I'd bought 4 shares, the market started collapsing and we almost had a run on the market. And I think officially a correction has now been called. And I got a lot of people sending me messages saying, what on earth are you doing? Why are you buying shares at the moment? Everybody should be selling. This isn't the time to be posting videos talking about buying shares. But if you watch that video, you'll know that I talked about the fact that I was making a rational decision based on what was happening in the market at the time. And the 4 shares that I bought were all European defence stocks. And obviously what's going on right now with regards to the war in Ukraine and the potential situation with regards to the USA not supporting Europe and Europe therefore having to step up and invest more. And a lot of European leaders came out recently and have said that they're going to increase the percentage of their GDP that they're spending on defence. And obviously all of that means that the companies that are providing the equipment, who are providing the tanks and the missiles and the guns and all of that good stuff, are going to benefit from an increase in demand and probably lots of long-term contracts. So that was the rationale behind why I was making the decision. What's happening in the markets doesn't really have any impact because I'm not buying an index. I'm not just investing in the general market. I was investing into specific companies for specific reasons. And as I also said in that video, one of the things that I've struggled with, I think, historically, when I'm investing in the markets is knowing when to sell, because quite often I'll invest into a share and it will rise in value and I think, fantastic, I've done really well. I give myself a big pat on the back for being such a great guy. But then I'll just watch it slowly start to come back down. And it's the whole boiling the frog syndrome, this concept where if you put a frog into boiling water, it will jump straight out. But if you put a frog into a bucket of cold water and then heat that water up until boiling point, the frog will basically stay in there until it dies. And that's a little bit like what's happening in the markets, because if you just sit and watch your shares slowly edging down, edging down, edging down, edging down, and then all of a sudden you're making a loss and you start thinking, oh, actually, I should have sold last week, should have sold last month, I'll wait until they come back. You could be waiting for a long period of time. So in order to try to address that problem of not knowing when to sell and not taking a profit, I've set myself a 2-week maximum period that I'm going to be in any share that I'm investing in this category, because I do invest into indexes and things like that, but this is a completely different arrangement. These are shares that I'm buying because I think there will be a short-term movement. It's likely that there will be an uplift in the price at some point within the near future, and if it doesn't happen within 2 weeks, then I'll exit anyway. But if it does happen within the 2-week period, then I will sell and move on. So I want to give you an update as to what's happened with those 4 shares, because I have just sold out of all 4 of them. So if we start off by looking at BAE Systems, which is the UK-based defence contractor, I bought those shares on the 5th of March for 1609, and today they're selling at 1607. So they're basically the same price as they were when I bought them. So I haven't made any profit, but I haven't made any loss. Thales is the French defence company, and I bought those shares on the 5th of March for 243.50. And as you can see, the price to sell today is 243.50. So once again, I haven't made any money, but I haven't made a loss. Leonardo is the Italian defence business, and I bought these shares on the 5th of March for €45.23, and as you can see, they are selling today for €45.83, so that represents a profit of 1.3%. And Rheinmetall is the German defence business, and I bought those shares on the 5th of March for €1,166.50, and as you can see, they are selling today for €1,337.50, which represents an uplift of 14.7%. Now, I invested an equal amount into all 4 of those shares, and the outcome is that I made no profit on BAE Systems or Thales. I made a 1.3% profit on Leonardo and a 14.7% profit on Rheinmetall. So over the 4 stocks, I've made a 16% profit. So that equates to 4% per investment on average. And that was in a 9-day period, because I exited the shares today on the 14th of March. So the money was in those shares for 9 nights. So if I annualize that profit of 4% per investment, it would make me a return of over 160% over the year. Now, obviously, that's going to be difficult to achieve because I'm not constantly investing into shares every single day to make this sort of return. But it gives you a flavour as to what you can do in a short space of time. I am putting my money to work and I'm doing it based on analysis. Basically, if you've been watching the channel, you'll know that I've been talking for a long period of time as to what's been happening in the war in Ukraine. And there are ways that you can monetize that. You can take that information and apply it into the real world. And obviously, what's going on right now is going to be beneficial for all of these European defence businesses because that's what's happening. European countries are investing more into defence, and there are only a very small number of companies who are actually authorised and accredited to be able to provide that equipment. So they're guaranteed the business. Now, obviously, don't take that as advice to invest into these businesses because I've just exited from them. But as I described earlier, the reason why I've exited is because I want to be more disciplined in my investing. When I invest into something, I want to have a defined timeline to say, when am I going to exit from this investment? Because the longer you stay in, you might make some money, like Warren Buffett, who invests in things for 10s or 20s of years. But for me, it isn't really very interesting. It isn't very exciting. And also, when I'm doing my analysis, I want to be able to put it to work immediately, make a return, and then move on to something else. There is a distinct possibility that I may go back and reinvest into these companies in the future, but I'm making an informed decision to do that rather than just leaving the money there, just sitting there, waiting for something to happen, maybe positive, maybe negative. And the problem with a lot of investments is you do the research, you make the investment, and then you forget about it. And then in 6 months' time, you suddenly think, I wonder what's happening with that investment. And you look, and maybe it's done well, but maybe it's done badly, and you haven't been following the news. So you need to stay abreast all the different information to stay across why you're still investing in that company. It's a little bit like a trader. When you speak to a trader, when I used to work in finance, when I worked in the city, and somebody would call me up and say, would you like to buy these shares? And I'd say, I don't want to buy them. I'm already invested into that company. And then the broker would say, well, would you like to sell them? If you're not buying, would you like to sell? Because traders always want to trade. And that's sort of the mentality that I'm applying now to my investing. I'm looking at all of my investments and thinking, is this a buy? Is this a sell? Because I don't want to have it's just a hold. Either it's still a buy and therefore I'll continue holding it, or it's a sell and I'll sell it. Just a hold for the sake of holding it, I don't want to be doing that because there's no real fun in that. And also, I can put that money to work somewhere else if I believe there are better opportunities in the market. So I wanted to post this update really just to provide you with a finish in terms of what's happened with these investments, because I said I'd made the investment and then I haven't given you an update. And of course, I could just disappear and just delete the video and never mention it again. But I wanted to draw a line under it. I wanted to show you that you can make money in the current market, even though there's a lot of nervousness and there's a lot of people selling and there are a lot of shares that are coming down in value. But many of those shares have been overvalued. They've been trading at ridiculous multiples compared to what those companies are making in terms of revenue and maybe profit, or some of those companies aren't even turning a profit. When you're looking at a lot of tech businesses, the multiples are off the scale. So there was a lot of froth in the market. There still is. So I think there's a good chance that many share prices will come down over the course of the next 3 to 6 months, possibly longer. But there remain lots of really interesting opportunities to make a profit. There are lots of companies that will rise in value over the course of the next 3 to 6 months. And hopefully I can pick out a few more of those. So drop me a note in the comments below to let me know whether or not you like this video, whether you want me to post more like this, talking to you about what I'm doing. This isn't something that I'm encouraging everybody to follow. I'm not sort of saying buy this stock immediately. I'm just telling you what I'm doing. I'm sharing with you how I'm making money, using my money to actually make a return, and why I'm investing into these shares, and then when I'm selling out of them. So that's basically what I wanted to share with you. If you've liked it, then please let me know. Give me a thumbs up and subscribe. Had lots of people unsubscribing when I posted the first video, which isn't surprising, I guess, because the channel is predominantly about economics and geopolitics. So this is a slight divergence, but I thought it'd be interesting. It's the sort of thing that I like to watch, and I thought you'd like to see it. So thanks very much for watching this video all the way through to the end. And here's something to put a smile on your face.